Well, obviously, once you get into a bear market, it's difficult to start buying protection. But certainly buy some protection to the downside on rallies. All bear markets have rallies, have relief rallies. But the main thing we've been saying since early November is raise cash. Raise cash. Every 7 or 8 years, cash is king. And I think we're in one of those positions where you want to keep your powder dry, you want to step back, you want to watch how it plays out. Of course, scenarios can change, one can always be wrong, but once in a blue moon, when the risks are high, as I think they are at the moment, and the central case is that we're in a bear market, the clever thing is to go to cash, and then the stuff that you still have in risk assets, obviously move to the more defensive side of the market. US equities are actually more defensive than most global equities. Parts of the US market are more defensive, naturally healthcare and staples and so on. But really, cash is king. Gold is another interesting option short term. That's another defensive, protective asset that's worth owning some of over the next few months, I think. There's an awful lot of places I wouldn't want to be invested. I think things exposed to China, I think super high risk. Do you know what? Commodity prices come down an awful long way, and one's not inclined to forecast more weakness when you're in such a mature bear market. But I still think there's more downside, so I wouldn't go into resources stocks. I think energy stocks I'd avoid. Some of these companies will go bust. Small ones have already started going bust. We need proper bankruptcy, I suspect, to mark lows in those sort of areas.